Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Friday, January 5th, and we are finishing out the first week of the 2024 year. We're looking at the TTC dashboard. Before I dig into anything crypto, do want to give you guys an update about what's going on the equities side. I was wrong about what the data that we got on the unemployment report. So as I mentioned yesterday, we wanted to see hourly wages going down. Was 4%, expected was 3.9. We got 4.1. That's not good. And it increased month over month as well from 0.4 down to 0.3, now back up to 0.4. And the unemployment rate actually decreased. So remember, we had the conversation about the fact that we needed to see unemployment continue to either stay steady or creep up, and we wanted to see wage inflation go down. Well, neither of those happened, and obviously equities took a bit of a tumble. Now, we did make a lower low on the lower time frames, but we did immediately zoom back above the 46.93 level, and we're sitting back above it. So one could look at this as possible deviation of the range. Now, the range would obviously be our high is up here, our mid range is right here, and our low end of the range is right here. So for those listening, low end of the range 46.93, mid range 47.48, top of the range 47.95, and we're looking at US 500, which are S&P 500 futures. So now, if this is a confirmed deviation, it should continue to stay above 46.93, balance off this, and then make its way up to 47.48 for the next decision. Now, we did get some early indication that we rejected off of this same level that we rejected off before, which does coincide with the weekly VWAP. So strong rejection off the weekly VWAP. Definitely not the most confidence-inducing set of hourly candles here either, but we are still above 46.93 and we still could propel higher. Now, if we break below 46.93, we're likely going to end up dropping down to 46.43, and I would say 4600 is probably at least likely in the near term. I'm going to go ahead and zoom out to the 1 day. Now, if we're looking at the 1 day, we have not reached that all-time high yet. We did get into this demand zone up here that we talked about would be a demand zone. But in the grand scheme of things, still on this large macro chart, what are we seeing? We're seeing higher lows and we're seeing higher highs in the grand scheme of things. So as long as this next low that we put in is above this low right here, all is still well in the world. But that doesn't give us much indication of what to do in the next couple of months, because there's a very large variety of opportunities or occurrences that can happen if we break below 4600. Now, I think 4600 is critical because it's the previous high from July. It's also the high that we, or it's also a high that we then broke above in early December and obviously made a new high. So moral of the story is, if we fall, we can still fall to 4600, still be completely fine. That's a great springboard opportunity for equities, in my opinion. Now, if we break below 4600, then you start to get into how low can we collapse before things get hairy. And obviously, the lowest we can collapse is all the way down to 4100. So if we break below 4600, 4100 is pretty much the last hope for continuous bullish market structure. But there's plenty of opportunities in between. So not going to dig into what I think may happen under 4600 until we get to that point, because there's a million and one things I could talk about and where I would want things to hold. But at the end of the day, below 4600, at minimum, I want to see the 1 day estimated 200 moving average act as support. And if that does happen, then I think we will then continue higher from wherever we are. But below 4600, things get really tricky. So I'm not going to talk about that too much. Maybe we'll save that for next week, or if it does happen, we can talk a little bit more. But right now, we can fall down to 4600 and still be fine. And then, of course, on the lower time frame, let me just get rid of these things so they don't distract us in the lower time frames. On the lower time frames, of course, we can still survive 4693 and push higher up to 4748 and still be fine. So moral of the story is, if we fall below 4693, 4600 is going to be that next critical level. If we hold 4693, 4748, next critical level. So back to the TTC dashboard. Total crypto market cap 1.66 trillion, down about 1.5%. Bitcoin down about 0.5%. ETH down about a full percent. Still at that 74 billion trading volume. Bitcoin sentiment still bullish. ETH sentiment relatively neutral, but still in that bullish territory. Less tweets than yesterday, but we are heading into the weekend. But very weird is we're seeing a lot more red on the dashboard today. And that is likely because of the thesis that I've had for quite some time. If equities break below 46.93, best to de-risk, best to relax on leverage, best to possibly wait for a dip and gather some cash for any possible future buys, with just staying steadfast because of the upcoming Bitcoin ETF. Now, there were rumors that it was going to get launched today. Still think it's going to happen probably at or around the 10th, which I believe is next Wednesday. So still plenty of time for that to happen. But of course, we could see there's a million and one things that we think could happen. My most likely opinion for the Bitcoin ETF right now is that Bitcoin, let's zoom out to the daily to get a bit better of a perspective. And those lines matter for some discussion today, but I can definitely see Bitcoin doing something like this, where it jumps maybe up to 50, 53, and then comes right back down to where we were trading at, maybe does something like this and kind of ruins these stops down here, and then goes right back up to this. So I think, basically we zoom up on the candle, we sell off immediately, we hold support maybe around 40K, maybe 39K, and then we jump right back up to wherever we are whenever the announcement happens. So if we're sitting at 44K when the announcement happens, we jump up to 50, drop to 40, jump right back up to 44, and then it's like nothing ever happened again, because price seems like it's sitting at fair value. I doubt we're just going to collapse on the ETF announcement, but I do think we're just going to see a bunch of whipsaw motion. So I think I'm probably going to hold most of my assets, but if we do drop below 39K, then I'll probably start to sell some things off, because I'm just sitting in spot right now from much lower earlier in the year. So I can take a 5-10% drawdown if I think things are going to get hairy, but I'm still bullish for the rest of the year. So I don't want to completely jump out of positions, but I may take a small hit to then buy back lower. Or if we continue to maybe seep down, like if we do something like this, where we're just kind of seeping lower towards 40K before the announcement, maybe I take a little bit more risk off the table early next week. But I think it's probably, no one can hurt you or tell you anything bad if you're de-risking at this point, because I think that's probably a smarter idea. I'm just playing a little bit more of the long con with a number that I think is good for me to pull money off the table if I think that level is hit. So I'm going to be patient heading into the ETF, but do understand that a lot of my bullish thesis was around equities holding this 46.93 level. And if we do lose that level, I may reshift my bias and take some money off the table just to be safe and secure some profits. But for Bitcoin in the near term, we're looking at the 1 hour here. It's been pretty flat for quite some time, so not too much. And obviously nothing really actually happened today. We've just been sitting in this really tight range since late yesterday. But basically the magic numbers are get above 44.6, run back up to 45.9, break below 42.7, and drop back down to that 40.5 level. So basically anything in this range, probably good to ignore. Probably best to just play the breakouts in either direction. So above 44.6, 44 or 45.9 or higher, below 42.7, probably 40.7 or lower is just how I'm looking at things. And I think that's just probably the easiest way to describe it. ETH is more of the same, a little bit more of an uglier range, but I'm going to get rid of the middle stuff down here. So moral of the story, below 2190, probably going to go down to 2156. Below 2156, you have support at 2115 and 2070. If you break above 2305, then you should run up to 2355, and then above 2355 should be able to tag 2443. Else you're just kind of sitting in this range. Could you long 2265 up to 2305? Yes, but you still have this 1 hour estimated trend moving average and weekly VWAP sitting there kind of holding hostage. So I think it's better to wait for that break above 2300, 2305. Then you can kind of get in and start playing up to 2350, 2443. Else you're just waiting for a break of 2191, 2190, which will send you down to 2156, 2157. Break that, send you down to 2115, then break that, send you down to 2070. So I'm not going to go over too many alts and stuff like that. I mean, we've been, everything is topsy-turvy. There's not too many wins on the board today. Let's just kind of check. The biggest one is OX. The rest are kind of weirdos like LDO, MX, GT, and then, very small wins right now. So again, kind of a product of looking like a lot of people are de-risking. Don't think it's going to be a super exciting weekend, but you never know. So that's why it's just draw out those levels, stay safe. Definitely do not dip into too much leverage heading into the ETF. Probably safer to stay in spots. You're more than welcome to kind of pull back and wait, take some profits, wait for a dip. But if you are bullish heading into the rest of 2024, and this is just a blip on your radar, you may have a good dip buying opportunity coming up if we do see some lows created off the heels of the ETF announcement. But I do think ETF announcement will be initially bullish. How that follows, whether or not we get that dip and then back to normal price, that we'll have to see. You could ask the most successful human. I mean, ask Stanley, ask Druckenmiller, ask George Soros, ask, Jamie Dimon, ask, and then ask, anyone who's, proficient, ask Hasaka or Tree of Life or any of the popular crypto influencers. I don't think anybody has a single consensus about what is going to happen at the Bitcoin ETF, but I do think most people see it as long-term good, provided there are ETF fund inflows on the heels of the announcement. So I am still long-term bullish, provided we see inflows into the ETF after it is created and listed. I will be bearish if we do not see any interest in those ETFs, because then it just shows that this was a speculation rally and there's not too much meat and potatoes behind it yet. But I think it is more likely that good things will be on the horizon than not, with how things are looking and equities close to all-time high and talks of rate cuts on the horizon. Everything looks much better than it did a while back. We have this small kind of issue with the unemployment, but obviously, I don't think that equities would be kind of buying back and getting it above a key level if there wasn't some sort of trickery to be had. So I think we'll probably end up higher in the long run. Just got to deal with a little bit of confusion, a little bit of pain over the next week. So that being said, good luck, happy trading. See everybody on Monday.